All right. So now we're going to look at market cycles, and Bitcoin is the best asset in the world to look at for market cycles. We're just going to look at high time frames here. We're looking at Brave New Coin Liquid Index. It's the beginning of time, and we're looking at the daily chart. And so what these market cycles are is, we talked about it a little bit in the charting video, and this is going to be kind of a rehash of that, and won't be too long of a video. What these market cycles are where big players are trying to increase their overall percentage holdings of an asset. Or that's what I think they are. Maybe it's something different. That's what I think they are. It's a way of, if you're a big enough player, if you own a large enough percentage of the supply and there's, limited liquidity in an asset, then in order for you to scale into a position, the chart, you need to generate sell pressure. In order to scale out of a position, you need to generate buy pressure. Because you need other people to buy your bags, you need other people to sell you their bags at the bottom. So, that's what Bitcoin does over and over. And, this is something you need to factor in, like, always, is that, let's go through this. Bitcoin does the same thing over and over. And why does it do that? It's because the supply is programmatically decided. And so everyone has a consensus. You see how it spikes and then dumps, and then looks like it'll go down forever, and then it pumps again. And it's going to probably keep doing that forever, unless, maybe there's some issues with, maybe not forever, maybe there's some issues with, the fee structures and stuff like that. But we're entering a bull cycle now, and that's why I'm trying to rush these videos as much as I can. I want to give y'all, anyone who is interested in this information, I want to give them as much info as possible, as quick as possible, because I think that we're out of time. We're at about a year of bull cycle probably, and a year and a little bit of starting capital and some knowledge. I think pretty much anybody can make it. The right person. You got to be built for trading. Trading is inherently gambling, but it's a calculated type of gambling. It's a statistical type of gambling. Trading isn't math. You can't say, oh well, RSI is a bull div, and the volume's high, therefore price will go up. No, its price is likely to go up. And depending on how likely you think it is how much you should be placing your position sizing. And we'll go into that more in the risk management. But anyways, we're in the market cycles video, and I like to make all the videos the same video, I think, but just because of the ADD. But anyways, so we pump, right? And then we dump, right? So what's happening is that people are accumulating, and there's a lot of buy pressure being generated. And once there's enough buy pressure, big players are saying, well, okay, finally I can sell. I can finally take some profit without making this market completely collapse. And so they start taking some profit, right? And it's really up to them. Like it's up to them. It's up to the holders of supply when a market's going to dump. Now, if there is a sufficient amount of buy interest, sure, you can overwhelm the supply. And sure, they can't dump until that, they don't want to dump until that buy interest starts to wane. Once the buy interest starts to decrease is when you want to start dumping, because you want to dump for everybody else if you're a big player. You want to be the wick that you wish to see in the chart. You want to be that guy right there that sold right there and made the price dump. Because what that meant is that you had the best exit and you had the most money. And then once you dump it, right, you say for example, early on, there were just a few players that had enough Bitcoin that actually understood market dynamics. Let's say for the sake of it, and I don't think this is the case. I'll say this again, I've said this before. I think there's probably a lot of actors that just understand how markets work and are selling in concerted, but not coordinated effort. But let's say, for the example, that we use something like Wyckoff, where he tries to say that the market is all, the market maker, or the scary people that are sitting back there in the matrix with the fucking TVs that can see everything, whatever, the people that control it. Let's say that there are people that control it, and what they'd be doing is they'd be buying to get up through here into a markup phase. And so a markup phase would just mean that you're exhibiting constant buy pressure, and it might not be you; it might be a series of institutions, like which is what I think is happening currently with Bitcoin. There's a lot of hedge funds and other financial institutions that want to hedge the U.S. dollar's inflation rate, which is out of control, and hedge the debt, the rapidly increasing debt ceiling for the U.S. And so they're doing that with Bitcoin because it's a fixed supply asset. It's better than gold in that respect. Gold's not a fixed supply. Anybody can find a huge gold mine and rapidly increase the supply. It might be unlikely, but it's something that can happen. It can't happen with Bitcoin. Anyways, so let's say, for example, that we're in a markup cycle. In a markup cycle, that just means that there's more buy interest and that there's a lack of sellers. Bitcoin typically enters a markup cycle a short period after it goes through the halving. The halving is the reduction in supply issuance. Why? Well, part of it's probably a market consensus that it's going to do that, and then part of it's probably the fact that there is less daily supply. Miners are the, when you mine Bitcoin, you're paid in Bitcoin. And when you're paid in Bitcoin, currently, you're not able to pay your bills in Bitcoin. You can't pay the electric company in Bitcoin yet. Probably will be able to eventually, or maybe be able to pay them in some crypto. But for now, you can't. So whenever you mine Bitcoin, you expend a lot of electricity and you have to use mining hardware. And what you're having to do is you have to sell. You have to sell to make the money to pay the bills. And you might not sell all of it, but you're selling some of it, enough to pay. And on top of that, well, not on top of that. Anyways, it's the daily sell pressure is mostly coming from miners. A lot of it is. And it's at least the most consistent daily sell pressure. So that daily sell pressure gets cut in half every time we get a halving, which is good and which is bullish, which means that there's, less selling. And if there's less selling, that means the number, it's easier for it to go up. But beyond that, markets are manipulated and I don't know how manipulated Bitcoin is, but to say it's not manipulated at all is absurd. It's in everybody's best interest to manipulate it. And the way the regulations work right now is such that it's regulated similar to Forex. And it means that there's just really the manipulation laws are pretty lax on it. You're allowed to manipulate Bitcoin to a certain extent. And even if you weren't, we've got these doctrines like the efficient market hypothesis that think that, price just goes up because it goes up. It doesn't go up because of buy or sell pressure. And you can even look at, SEC regulations where they discuss that it's not insider trading to tell your buddy that you're about to market sell your entire supply, even though that might cause price to go down. So digression, but the market's probably manipulated. Okay. So just accept that and it's fine. And it's actually better if it's manipulated. It's easier to trade if it's manipulated. That means that there is a reason behind it. It's not just all noise. You want it to be manipulated. You want someone to be at the wheel. We don't want us to all be fucking just careening around. Who knows where the fuck? Who wants to trade a market like that? Nobody. Okay, you want it to be manipulated. So let's assume that it is. Okay, and so what they're doing is they're buying a bunch at these lows, right? And then they're placing limit bids, and as well as some market orders, and they're buying all the way up here. As this goes up, they're buying it up. They're buying it all the way up. They're buying it until the price is so high that everyone wants to buy it. And when the price is so high that everyone wants to buy it, I mean, even your grandma, your grandma's dog wants to get their ledger filled up with Bitcoin. When the price is that high, well, that's a pretty damn good time to sell if you have a lot, right? And so you sell it all off here. And when you sell it all off, it drops it. And then you don't want to tank the price. You don't want to completely collapse it, right? So eventually you let off, and then you let that buy pressure come back in. Oh yeah, okay, well, it's just fine. That was just a correction. And then, okay, bam, we got enough buy pressure. Let's sell off. Okay. Oh, okay. It's fine. We finally, we confirmed some support here. We're gonna keep going back up, right? Well, once there's more buy pressure, you sell, and eventually the market starts to mark down for you, just like how the market starts to mark up for you. Whenever there becomes a consensus that price is going to keep going up, well, then why would anyone sell? Why would anyone sell if the consensus is the price is that it's going to go up? That makes no sense to sell. You don't sell an asset that's going to go up on you. So you keep buying. And I don't know exactly what these numbers are, and these numbers probably vary. And someone that would know these numbers is probably exchange owners. They know how much you'd have to buy, what percentage you need to be buying until people start to actually do it for you. But at some point, the market starts to mark up for you if you're a big player. And what that means is that you have bought enough to where people have grown confident enough that it's going to keep going up that they want to buy too. Okay, and so that's what the beginning of a bull cycle is. Beginning of a bull cycle is whenever the big boy decided, you know what, my bags are full enough. And if I keep buying here without marking it up, then I'm not going to have enough to mark it up later. So let's just go and start marketing up. So we'll place, limit bids under the price and chase the price with these big limit orders. And then when we need to, whenever people want to sell, we'll just fucking market buy it from them. And we'll just force price to go up. And then eventually, once you break through enough resistances, there's no resistance left, right? And you get into one of these really emotional parabolas. And, what these are is a lot of people buying at once. It went 260%, a few days there. And when a lot of people buy at once, that gives you more room to sell. And so you bought a bunch here, and then you sold off some percentage of it here. And then you retained enough supply to where you could keep selling it. And you kept selling it until there became market consensus that it was going to go down, right? And I'd say that market consensus starts to happen about right here. People are like, oh, fuck, well, maybe we do start going down. People might have drawn some lines here and said, oh, we're just retesting this, So this is, and then once we established that line. Once we broke that line, it's pretty deep into a bear cycle here. And then we entered a accumulation period. Everybody has assumed it was going to go down. The market starts to die. The volume starts to die down. I wonder if this has volume on it. well, you can't really, the volume usually does start down in a accumulation period, but we can't really tell because there also might have just been more exchanges coming up that offered it, and the market in a whole might have been, yeah, generating or whatever. This is BLX, so it's combining everything at once, all the exchanges at once. But anyways, long story short, that's beside the point. Accumulation phase, right? So we have a accumulation here. We have a distribution phase. We have a capitulation where everybody gave up. Everybody said, okay, I agree, the market is going to go down. And then we have this accumulation. And the accumulation is really more drawn out like that. Or even further. Maybe the accumulation is more, all the way out to here. But then we just do the same thing again. And Bitcoin does it over and over again. You see the chart just randomly, we just, boom, within, 45 days, we just auto scroll. And that looks like we can't even see that pump in the past anymore, right? Bitcoin does that all the time. We're entering one of those cycles. I want to try to give you as much info as I can before we enter it. It does the same thing here. We accumulated through here, little test pump, and then we, extreme FOMO, tons of buy pressure, and was sold into. And so, say for example, they bought, 100,000 Bitcoins down here, right? From the, this chart looks like a crazy person, but get these out of the way. And then in order to get up there, they had to buy another 10,000, right? So let's say they bought 100,000, through here to accumulate, and then 10,000, through here, and then they had to sell off right here, right? So let's say they sold off, they have 110,000. Let's say they sold off 60. While they were taking advantage of all this buy pressure, and everybody was still, fervent about it. So now they're down to 50. This is just all theoretical. It's just an example, right? So now by the time they get down to here, they're down to 50,000 Bitcoins. But people are so bearish here that they're able to buy. Let's say, for example, this is all, once again, theoretics, but this is the idea of it. It's the idea of distribution, accumulation, and markup and markdown cycles. Okay? Let's say here they're actually able to buy 80,000 additional. So they were down to 50,000, and then in this period they bought 80,000. It means they have 130 now. So whereas they started with 110, they were able to get a net gain of 20% or 20,000 Bitcoins, right? And so if you do that over and over throughout these cycles, and these cycles happen on all time frames, they're fractalized. I can't show you on this because it's limited to the daily chart, but you'll see them happen on smaller time frames. Like for example, here was one where we had this little mini markup cycle in 2019, and then a distribution cycle here, and then a capitulation, a grinding capitulation with a big capitulation here, which was I don't think the market necessarily would have gone that deep if it wasn't for COVID and for the global market collapse. But either way, that's a clear capitulation right there. That's capitulation. And there was a lot of buying there. There was a ton of buying right there. People were able to fill their bags. So, they had to sell some to make the price go down, but they were able to, their selling was done in a way that allowed them to get net sell pressure that was increased, that made it to where they could buy more down here. And they make money when it goes up. So when it goes up and their average entry with 110,000 Bitcoins, say their average entry is right here, right? Theoretically. Delete this. Say they have 110,000 Bitcoins from the past example, right here that they had an average entry of, right? And let's say their average exit's like right here, right? So, they've got a little average entry, average exit. They gain 67% on their position. That's 67% extra money that they have from, USD, using, or USDT, I guess, in this case. Perhaps it's USD, perhaps it's USDC, whatever it is, whatever market you're trading. Dollars. They have some sort of dollars, and they've gained 60% on that of the amount that they were able to sell up here, right? And then when they get down here, they have more money to be able to buy more. So they're manipulating the market, but what they're doing is they're absorbing supply. And this form of market manipulation is bullish long term, because if someone is willing to do something like this, what they're doing is they're willing to generate USD and then not take that much of it as profit and turn that USD into, and this might be a series of actors, like I said, it might be a concerted effort by all the Bitcoin bulls or by just the Bitcoin community in general, which is much more likely, but it's easier to explain as if it's a mysterious man, right? But anyways, so they make that money, and then they pump it. And what they're doing is it's bullish long term because those people that are true believers are absorbing more supply. Okay, and that's what Bitcoin does over and over is we see the supply. You know, people say weak hands, strong hands, smart money, dumb money, whatever you want to call it. Someone loves Bitcoin, and someone has consistently always loved Bitcoin, and someone's probably going to keep loving Bitcoin. And the only reason it's probably going down is a form of long-term, high time frame bullish selling. And what they're doing is they're trying to absorb more supply, and the more supply they absorb, the more percentage of supply that they have, the more control they have over price. And if someone, let me ask you this, if someone, say for example, someone eventually owns 50% of all Bitcoins, you know, like Grayscale or something like that, why would they ever want to make price go down after a certain point? At a certain point, they don't. At a certain point, they want price just to keep going up. They stop selling. You know, it's very bullish when people want Bitcoin, large players want Bitcoin to go up like this. And what we're doing is we're moving supply out of, you know, the retail hands that bought up here into the big bull hands. And those big bull hands are really strong, and they're not hurting for capital at this point. Bitcoin's pumped a lot. They're not hurting for capital. They're not going to sell until they need to sell. And you know, part of it is, you know, the idea behind it is that they need to be selling whenever it's, you know, gets overextended, because, you know, that's part of it. You don't want it to let price get so high that it's unsustainable and then it crashes way hard, because then people might be too much sell pressure for you to catch. And so there's a lot of responsibility with being a market maker like this. And, you know, there's a lot of respect that should be, you know, given to people that understand these dynamics much better than I do. You know, I just understand the basics of it, but that have done it and understood it since the beginning. And it's been in this, Bitcoin's always accumulating. And a lot of these assets are. Ethereum does a similar thing. And I think Ethereum will continue to, once it's fixed its supply, its issuance. We'll be doing soon. But anyways, digressed a lot. Hope that was some good info for you. That's how I see market cycles.